The main event to note will be the recent peak forming in line with a historic double top area. With the chart rapidly falling again, these 3 points which define the past 2 trends can be quite useful to reference for a trend-based Fibonacci time zone, since this new downtrend hasn't formed any clear swing points since the peak. Then horizontal levels from a Fibonacci retracement can be based from the high to the low of the recently reversed uptrend. As usual, a normal Fibonacci time zone can also be placed at the same position as the second and third points of the trend-based Fibonacci time zone. In this case, the downtrend doesn't progress much further and instead ends up being a larger bearish retracement as the chart breaks past previous historic highs. To get better results with the Fibonacci time zone tools, it is highly recommended to adjust and position them once it became apparent the first swing points had formed in the new downtrend following the peak that began this example. Of course, the number 3 Fibonacci time zone line doesn't perfectly align with the exact upswing point that began the bullish continuation, though it does run through the Harami candle pattern, which significantly halted the drop prior to the main bullish reversal. And naturally, a top choice to reposition the trend-based Fibonacci time zone would be to base it on the prior uptrend and have its second and third points at the same position as the regular Fibonacci time zone. However, one drawback of basing it on the entire uptrend is that it's quite a long duration. So it results in wide intervals between the lines in comparison to the regular Fibonacci time zone's placement, which is better suited for the developments in the short to medium term context. The most minor adjustment to help with this issue is to shorten the trend-based Fibonacci time zone up to the final downswing in the previous uptrend. Now the intervals between the lines aren't too wide, and their closer proximity to the regular Fibonacci time zone lines in theory helps better define areas of interest. But unfortunately, this isn't always the case with every area, and this particular time on the chart is a good example of that. Another option would have been to wait for the bullish break over previous highs and then reposition the regular Fibonacci time zone on that final downswing of the bearish retracement, because it's the last area of clear swing points with recent context that is more relevant to the chart as it climbs near vertically without any immediate swing points forming towards new resistance areas. That is until reaching the area marked in gray that is now quite well defined in the time ranges of these lines from the trend-based Fibonacci time zone and regular Fibonacci time zone. Remember to also have these less commonly used Fibonacci levels displayed, because like in previous examples with default settings for the retracement and extension levels, there can be missing detail when reaching the extension levels, since the Fibonacci levels are based on such a wide range.